Let's take a look at some charts, figures, and graphs on Ethereum for Brave New Coin. I'm going to start where I usually do with the hash rate and difficulty. Ethereum currently a proof of work coin, will transition into a proof of stake coin probably sometime in 2022. We'll see. I haven't found a hard date on when that'll happen. But in the meantime, hash rate is exploding, continues to explode. One of the most underreported or discussed phenomenons of 2021 easily has been ETH's hash rate. Now, it makes sense if you think about miner revenue, which has been talked about heavily in 2021 relative to ETH fees, relative to EIP 1559. All this stuff is in the same basket of conversation because it's all related. But miners, whether they be ASICs, whether they be GPUs, cannot get enough of Ethereum hash rate. They are gobbling it all up. Now, I hear virtually nothing about Ethereum mining farms around the world. All I hear about is BTC, good and bad, mining proof of work wise. I hear nothing about ETH. I don't know if that's a me thing, a bubble thing for me. I have no idea. But if you are aware of some articles that I missed over the past month on this, let me know. But yeah, I don't see anybody talking about this anywhere. And if we look at ETH ASICs at 4 cents per kilowatt hour, there are two coming soon. There were two that were released in November, all of which have insane profitability relative to everything else in the market. It only makes sense for you to mine ETH up here. The problem is, this is the siren song of mining. They suck you in during the height of a bull market. You send in your order to buy the miners. There's a lag time on the order. Eventually it gets sent, and then you're mining at a loss consistently because it's in a bear market now. Now, for ETH, that hasn't been the case yet, but historically, that's kind of how mining has worked. People love to pile on mining stuff at the height of a bull market. That's when people hear about this stuff, right? It makes sense. I mean, Helium is a great example, HNT, of something where I continue to be baffled by the amount of new crypto people who find out about this stuff. I guess it's TikTok. I don't know. So they'll put in an order for these miners or miner equivalents, hardware. It'll take months to get to them. By the time it gets to them and they're starting to use it, the ROI gets longer and longer and longer. The profitability shrivels to nothing, right? That hasn't necessarily been the case yet, but I'd watch for this. And one way to know is not the ASICs, I don't think, because these are super new, right? Most of these are late 2020 or late 2020 or late 2021. Aside from that, it's just been stuff that is probably no longer even in existence. So this isn't even something to really watch for per se, but you can certainly, we'll hear about this, right? Because you'll see Craigslist ads, you'll see eBay listings for selling these miners, right? It always happens every cycle, and this won't be any different. You're going to get people who bought these, can't recoup the ROI, and then sell at a massive loss. That's going to happen. It always happens. And then there are going to be people that just mine regardless, where they don't care. But something to watch for, I think, is the GPUs. GPUs have been out of stock for months and months and months, and I would know because I'm trying to get a new 3080, okay? And I can't unless you buy a pre-built computer. So my guess is the crash in crypto prices, should they happen in the next 2 years, will coincide with the availability of ASICs, both 3080, 3090. I don't even know what the numbers are on these as far as mining. Maybe the 3070 is better. I don't know, but all these ASICs are either out of stock or the prices are astronomically high, several multiples above MSRP, and or MSRP is just skyrocketing, right? I mean, paying $400 for a graphics card used to be insane, and now look at these prices. Yes, this is top of the line. Yes, these are in demand. I get it, but crypto mining is definitely having an effect here. Specifically, I believe ETH because of ETH revenue. One thing to watch, ETH mining revenue. One thing to watch along with BTC is exchange reserves. Exchange reserves largely flat here over the past couple months for ETH. Nothing really to comment on one way or the other, but the trend for the year has definitely been declining rapidly, really, if you zoom way out. And yes, some of this is in TVL, some of this is in DEXs. So it's not a pure metric by any means, but it is something to consider. If we are bearish, you will very likely start seeing an uptick in exchange reserves because people will be sending their ETH to exchanges to sell, or you're going to see liquidations from DEXs on chain. You're going to start seeing more on chain stuff regarding reserves for ETH, certainly. And you may even see miners start to send ETH to exchanges. Something else to watch for would be USDC to exchanges or USDC reserves. I don't have the best data for that, but that data does exist. Because as an ETH miner, what you could do is sell to USDC on a DEX and then transfer the USDC to an exchange. But until USDC is an accepted currency widely, you're going to need to offboard that somewhere, either in ETH or in USDC or USDT. At least in the United States, USDC and USDT aren't broadly accepted as currency. And you can see ETH miner revenue still above 50 million here, accounting for all types of revenue, BTC revenue at 40 million here. One way to read this would be the amount of buying necessary to hold price up at these levels, assuming miners are auto selling everything. Now, they certainly aren't doing that with BTC. I haven't seen the data on ETH for that. I think that's harder to track as far as ETH miner wallets. Not impossible, but I think more difficult to track. And I haven't seen the data on it. But that'd be one thing to watch for. And it would be a good way to see probably what percentage of this is GPU mining related, another metric to find if that's even discoverable. What percentage of the network is GPU? What percentage is ASIC? ETH's a bit of a different beast compared to BTC. So I have less to talk about with ETH because more of it's sort of unknown or freely available. But these are all the types of things that you'd want to look into in a deeper way. Obviously, the ETH miner price for 3080, 3070 would be the next question when what percentage of the network is mined by ASICs and GPUs is figured out. Then you figure out, okay, what is the ROI break-even price? And then that gives you somewhat of a floor dependent on the percentage of the network that's being mined by either of those. So anyway, something else to consider, certainly. Net emission after EIP 1559 is certainly not negative anymore. It was briefly negative. Now it is at a multi-week high as far as emissions are concerned. So they're burning less is another way to read this compared to where they were burning previously. Certainly not bullish, but not crazy bearish either. Again, another way to read this would be, what is the buying power necessary to hold price at the current level, assuming all ETH mined is auto sold after being mined, right? So currently you'd need 8.6K ETH bought per day to hold price at the current level. One way to think about that. If we look at ETH transaction counts here in the line graph, transaction counts have been declining since November, kind of along with price. Price is kind of angry over the past few weeks. That's certainly not bullish. And average transaction values absolutely skyrocketing on fees, absolutely skyrocketing. Not really a secret here that some of these layer 2 chains are eating ETH's lunch. And as ETH goes increasingly towards layer 2 type stuff, the question for me has always been, how does ETH differentiate itself between anything else that can do and if everything that ETH can? Is it decentralization? Is it security? Is it the community? Is it the walled garden? Is it devs? You know, maybe all of those things combined that mean ETH can remain king. But first things first, you got to get these fees down. You got to get people back on chain doing microtransactions or layer 2, right? You need solutions for people. Otherwise, they're going to go literally anywhere else because it's cheaper. They're going to go to BSC, they're going to go to AVAX, they're going to go to Matic, whatever, right? So you got to fix that. This is a huge scaling issue for sure. And they're aware of that. And we can also see the scaling issue here. This is the mempool weight in, I think this is megagas, milligas, it's not microgas. Anyway, it's in gas. But the point is, we are back to pre-ceiling raise on block size limit effectively. Levels of transactions just kind of waiting here. Now we can look at the count as well. Count is also at the ceiling. You know, this is the new ceiling, I think. Previously, they being the miners agreed to raise the gas limit, and you know, we have EIP 1559, we have all this other stuff, and yet we're back at square one. You know, we widened the highway and we just got more traffic. We didn't scale effectively. We didn't add public transit. We didn't add some sort of vertical transportation, right? We just widened the highway effectively. So it's no surprise that pending transaction counts are still back at 140,000, right? Now, this isn't a bad thing per se long term. It definitely shows growing pains, scaling crunch, not such a great user experience for microtransactions, that sort of thing. Not unfixable, but ETH needs to get going with that certainly, because other chains are ready to pick up the slack there. If we look at active addresses in the line here, active addresses also declining over the past few weeks, definitely down from all-time highs. Certainly not blanketly bullish. NVT still in a range. I'm not a giant fan of NVT, but you do want NVT falling rather than rising if you're bullish. You want NVT at relative lows if you're bullish. It's, I guess, in the high side of neutral. If we look at this objectively, it doesn't really tell me much as far as actionability is concerned. Something else we can look at relative to the exchange reserves is ETH staked. Most of crypto is based on supply demand. So if supply gets soaked up, if Wi-Fi is buying their token, right, people get bullish. If people are squirreling away ETH in ETH 2.0, people get bullish. If EIP1559 is burning ETH, people get bullish. If people hodl and don't sell, price goes up. That's just basics. So there's currently 8.7 million ETH staked in ETH 2.0. This is locked until ETH goes proof of stake. So maybe it'll be a catastrophic unlock event where you're going to see this landslide of selling, kind of what we saw with ADA to some degree. I don't know, but my prediction wouldn't be we're going to turn massively bullish all of a sudden once this unlock happens. Now, there are ways to trade this ahead of time with like Lido and a few other things. But when this does unlock, I think it's going to definitely affect price, certainly. DeFi TVLs, mostly stablecoins, mostly multi-chain now. Again, it's tough for the analysis here because this is multi-chain, this is incentive-based, this is stablecoin-based largely. Ethereum still holds a majority, 150 of the 242 tracked by DeFi Llama in billion of USD. TVL largely still sitting at all-time highs here. So not bearish for any means broadly, but to some degree, you kind of have to take out the stablecoins and you kind of have to price this in ETH rather than dollars to get a true sense of what's going on. And if you look at most of these contracts, this is Maker, for instance, in ETH, it's rising, it's kind of flat, right? It's not super exciting. TVL is always going to look better in USD because we have an appreciating asset and it's rising. So that's baked into TVL here. But we're certainly not bleeding TVL on ETH by any means. Looking at Google Trends worldwide past 5 years, we're sort of cruising at the previous all-time highs. Still lots of people talking about ETH, crypto, DeFi, NFTs, right? Big story this year. And ETH is certainly a big part of that. So you're going to see a lot of searches for ETH, a lot of articles on ETH, that sort of thing. It's all going to show up in this chart. Flipping gears to technicals, this is the 1 year MA in the green line here, 5x that in the red, the midline in the white. For most coins I'm backtesting, this is an excellent oversold metric, telling you to sell when we get above red, buy when we're in the green. So currently the green's at 26, the red is at 14. Now this is going to come to some sort of equilibrium probably relatively soon because it's going to start averaging out of these rapid highs in late 2020, early 2021. And this is going to start to flatten out a little bit, but this is still rising. So the good news is the lows are getting closer to price. So it's not such a rapid descent into the buy zone, should we see that. The bad news is it's still about $1,000 plus away from price. So really long-term buys shouldn't be triggered until sub 26. That's one way to trade this. Another way to trade this would be any new higher high, any new all-time high has a target of 8 to 14 potentially, midline being at around 8. So lots of if this, then that stuff, a lot of wishy-washy, no strong directionality going on based on that metric. Using the 15 to 200 here, VPVR, RSI, we're still bullish, we're still above the 200, possibly mean reversion coming here, but ultimately we're okay trend-wise until we get a death cross on the 5200 like we did or have gotten on ADA already. ADA is just one example I'm thinking of because ADA looks similar to this, rose since April, crossed bearish a few weeks ago, and it's just been good night on ADA since then. So what you don't want to see if you're bullish into 2022 is a death cross on the 15 to 200. And yes, it can range, yes, it can fake you out, but the point is the momentum that you had since April is reset at that point. So to expect just blanket bullishness isn't really the smartest move. And as far as downside support and volume, not really much relatively until sub 4. Most of it historically on Coinbase is probably around 600 if we zoom way, way out. But since 2018, most of the volume has been in the 200 range. So ETH's had an excellent 2 years, certainly. Looking at the cloud, we are in the cloud. We have a bearish TK cross. The good news is when this turns bullish again, it's going to be super obvious because all these metrics are going to reflip bullish. The bad news is if you are bullish here, cloud is telling you you're wrong. You should be neutral. We're in the cloud. And we could bounce around here for the next 2 months probably and still be neutral. So until we're below or above, this is all just a giant coin flip. Expect volatility, expect nonsense because we are cruising on the river Styx right now. We're just paddling along in limbo until this trend hits continuation or signals reversal. And that'll be obvious in either direction. If this does make higher highs, if this does make new all-time highs, the target of 6 to 7 still stands. That hasn't really changed, just based on this consolidation since May. It's really just based on this high and this low. And what we do after that high and low sort of helps you set the tone, set the bias. First we had this triple bottom inverted head and shoulders, then we had a potential cup and handle that didn't really go anywhere. Volume didn't really pick up. Then we had a bunch of China selling over the past couple weeks. And now we're just kind of hanging here, waiting for the next move. So it's still very much if this, then that for me. And on the 4 hour, we've had a series of a series of lower highs coupled with a series of lower lows. Now this may have morphed into and out of both a head and shoulders and a falling wedge at this point. But it certainly is not this. It certainly is not October to November where we got this orderly uptrend, this tight channel. So if you're bullish, the first thing you want to see is a higher high. I mean, that is everything here. Higher high means things are getting different since November 22nd. Lower lows would just be more of the same. Lower lows would probably mean we just continue to fill this in as a falling wedge. A higher high would negate the gross looking head and shoulders that this became and potentially reset what's going on here trend wise. Then lastly on ETH-BTC, this still looks completely fine on trend. Bullish everything. It's above the cloud. It's above the 200. Certainly ascending triangle. It's playing out. Adam and Eve's playing out. The target's still as expected. The big question here is, will we hit 0.1 in a bear market with ETH slightly doing better than BTC? Or can ETH actually make all-time highs here on volume and blow BTC out of the water? The way this is set up, it looks as though you're going to see bullish continuation on ETH BTC, not necessarily ETH USD. So I think longs on ETH BTC are still safe for now. And things are looking much more neutral than they did going into 2022 compared to going into 2021 for the USD pairs. So that's all for this one. Like, dislike, comment, share, subscribe, and happy trading.